Right friends, welcome back to IBPS PY interview, how to face banking questions. What do you know about inflation? I would like to take up with a small example. I purchased this in January 2015. I purchased this instrument in January 2015 and at the time I purchased it for rupees 100. Now, January 2016, after 1 year, I would like to purchase the same instrument, but now the cost is 106 rupees. Last year it was 100. Now it is 106. There is an increase of 6 rupees over 100. That means the inflation is 6%. This inflation is calculated in comparison to the corresponding month last year. If you are talking about January 2016, the increase in prices in comparison to January 15 are taken. If you are taking about February 2016, you will compare with corresponding figure of February 2015. So that is inflation, increase in prices in comparison to the corresponding month of a previous year is inflation, and it is measured in two ways. One is the wholesale price index inflation. Second one is the consumer price index inflation. And if you talk about the wholesale price index based inflation, here the inflation is basically based on increase in the prices of manufactured products. Wholesale price index based inflation basically tracks increase in prices of manufactured products. That means predominant weightage is given for manufactured products. If you look at consumer price index based inflation, food and beverages has got the maximum weightage in consumer price index based inflation. That's why consumer price index based inflation reflects inflation at the common man level. That's why Reserve Bank of India takes into account this consumer price index based inflation. So inflation in general is increase in the prices in comparison to corresponding period of last year. So people talk about 5%, 6% consumer price index inflation. That means the prices are increased by 5% or 6% if you compare the prices with the corresponding period last year, right? So this is about inflation. Let us look at the second question. What do you understand by GDP growth? Let us look at GDP. What is GDP? GDP is gross domestic product. Gross domestic product is the total value of goods and services produced within the boundaries of the country. Gross domestic product is the total value of goods and services produced within the geographical boundary of the country, and when it increases in comparison to the corresponding period last year, that is GDP growth. We talk about GDP growth of 7.4% in second quarter of this financial year. All of you are well aware, in first quarter of this financial year, you may ask what is financial year? Financial year is from April 1 to March 31st. In the first quarter, our GDP has grown by 7%. In the second quarter, our GDP has grown by 7.4%. So, quarter-wise figures are released. That means in the second quarter, that is the July to September quarter, this year our GDP has grown by 7.4% in comparison to July-September of last year. And GDP figures are released by Central Statistics Office. They are released for 4 quarters, and at the end of the year, they are released for entire year as a whole. And GDP growth indicates whether the economy is growing or not. And normally, developing country like India expects a GDP growth of high figures, but developed countries will have GDP growth of 1%, 2%, 3%. But developing countries like India require more growth because a lot of people are still living below poverty line. To bring them out of poverty line, we require high growth rates of around 8%, 9% or 10%. And this year, the economy is expected to grow somewhere between 7% and 7.5%. And one fundamental point, please don't forget, the GDP growth rates for developing countries will be high and developed countries will be less in general. And at the same time, please don't forget, India is growing at around 7 to 7.5%, and this is the highest among big nations. Explain about Basel norms. Where is Basel? Basel is the place in Switzerland. Their Bank for International Settlements was situated, and several central banks are members of this Basel group. In the Bank for International Settlements, several central banks, or you can say several nations, are members. And what exactly it does? Basically, it looks at the stability of the banking system. Stability of the banking system as a whole across the world. Banks should not fail, because the failure of banks will lead to adverse economic circumstances. For that, it will come up with various guidelines. They are called Basel norms, and Basel norms are basically to be implemented by the respective countries so as to ensure stability of financial system in the country, and in turn stability of the global financial system. Basically, Bank for International Settlements looks at stability of the banking system as a whole. So now Basel I norms were published somewhere in 1980s. Subsequently, Basel II norms were published, and these Basel III norms were brought after the failure of the financial system during the year 2008 because of the loans given to unworthy customers, or you can say subprime crisis, and its contagious effect. Entire financial system failed in several countries during 2008, 2007 and around that period, and subsequently these Basel III norms are brought. And Basel III norms are basically for stability of the banking system. What are the main Basel III norms? First and the foremost is banks should maintain sufficient capital adequacy ratio. Capital adequacy ratio means if bank is giving certain loans, depending on the risks associated with that loans, banks should maintain certain capital adequacy. Certain capital should be available with the banking system so as to take care of failure of the loans, depending on the risk associated with the loans. That is first point. Second point is liquidity coverage ratio. Banks should have sufficient liquidity. Liquidity means at any point of time, banks should not starve for cash. Sufficient cash to meet day-to-day needs of the bank must be available with the bank. That is liquidity coverage ratio. Third one is net stable funding ratio. What is net stable funding ratio? If you look at a period of 1 year, banks should be stable, and for that purpose, sufficient money is available with the bank. Liquidity coverage ratio looks at requirement of money for 30 days, whereas net stable funding ratio looks at requirement of money in the banking system for 1 year. So this is the third thing. And the fourth one is concept of systemically important banks. Globally, some banks will be designated as global systemically important banks, and this concept is to be introduced by individual countries. That means important banks will be designated as systemically important banks, because of which they are required to maintain additional capital or additional capital adequacy ratio. And in our country, State Bank of India and ICICI Bank are designated as domestic systemically important banks. They are too big to fail. That means failure of SBI or ICICI Bank may have adverse impact on the banking system as a whole in our country. So these four are basic features of Basel norms. If people ask you what are Basel norms, they are basically to ensure stability of the banking system as a whole. What do you know about the marginal cost of funds based lending rate? Now base rate is in operation. Previously, benchmark prime lending rate was there, and probably in the year 2010, benchmark prime lending rate was replaced by base rate based on Deepak Mohanty committee recommendations, and now the banks have to switch over to marginal cost of funds based lending rate. What is the need for it? I would like to tell you, all of you are well aware about repo rate. Repo rate is basically the rate which gives signal to the interest rate in the market. When Reserve Bank of India reduced 125 basis points in repo rate last year, correspondingly, banks have not reduced their base rates. Keeping that in mind, Reserve Bank of India came up with the mechanism marginal cost of funds based lending rate. Here what will happen? Banks will devise lending rates for various time periods. So far, banks are maintaining base rate unique for all the lending periods. If you are taking loan for 1 year, if you are taking loan for 10 years, your base rate will be same at present. But in future, banks will come up with different interest rates for different tenors. All of you are well aware, for deposits we have different rates. If you are depositing fixed deposit, if you are making for 1 year, you will get 7.5%. If you are making for 5 years, you will get 8%. If you are making for 10 years, you will get still more interest. Like that, banks will come up with tenor based interest rates for 3 months, for 6 months, for 12 months. That means in future, the lending rates will be based on tenor. So, this is the new mechanism where banks will have to calculate their lending rates based on tenor of 3 months, 6 months, 12 months, like that. So, because of which there will be better transmission of policy rates while banks are giving lending. That means when Reserve Bank of India is reducing repo rate, then it will be reflected in marginal cost of lending rate. Because of the reason, in marginal cost of funds based lending rate, there will be different interest rates for different periods. So, just like deposits, in future, lending rates for different tenors will be there. That is the main feature of marginal cost of funds based lending rate. Right, friends? What do you understand by net neutrality? This problem arose because of Free Basics or internet.org, previously known as by Facebook. Facebook came up with initially internet.org, now Free Basics. What is the purpose of Free Basics? Free Basics will give certain internet sites, certain websites free of cost. So, this is popularly known as the differential pricing. Free Basics will give certain websites free of cost. You need not subscribe to data plan, still you will get access, you will have access to certain websites. That is the Free Basics concept, and that is known as differential pricing. If you want to access other websites, you have to subscribe to data plan. So, the concept of differential pricing is devised by Free Basics. The contention of Free Basics is, I am giving free internet to disadvantaged sections of society, to poor people. I am giving certain websites so that they will have a chance to access to internet, to access basic services. But the people supporting net neutrality says it is against the freedom of equality, which is the hallmark of internet. Internet should not prioritize certain sites. The concept of Free Basics, what will happen? It will prioritize certain sites in comparison to other sites. So, it loses the freedom of internet. That's what net neutrality people are telling. So, there is a lot of debate going on between the concept of differential pricing is brought by Free Basics, and the second one is net neutrality. Right? Wider debate is going on. How do you visualize the future of mobile banking? Definitely mobile banking will become the norm in future with the internet penetration, and at present we have 90 crore mobile phones and 20 crore Pradhan Mantri Jan Dhan Yojana accounts were opened during the past 1.5 years, and 92 crore Aadhaar numbers were generated, and with the integration of these three, that is the bank account, mobile number, Aadhaar number. Now in future, mobile will become the main focal point, and through mobile, people will have access to various financial services in future. Explain the features of Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana and Atal Pension Yojana. This Pradhan Mantri Jeevan Jyoti Bima Yojana is giving insurance with just 330 rupees per annum. Life will be insured up to rupees 2 lakhs. And in Pradhan Mantri Suraksha Bima Yojana with just 12 rupees premium per annum, accident insurance and permanent disability insurance will be covered up to rupees 2 lakh. And Atal Pension Yojana is basically to take care of the pension needs of the common man once he or she attains 60 years of age. And please go through the salient features of these. We have discussed in current affairs various lecture classes, right? So these three schemes are basically intended keeping in view the population below poverty line and keeping in view the common man of this country who so far have not availed insurance, then accident insurance or pension benefits. These are the basic schemes devised by Government of India. What do you understand by Make in India? Make in India is the concept India should become the powerhouse of manufacturing sector. So far there is not much emphasis was given on manufacturing sector. We are dependent on several imported goods, and the main focus of Government of India is let us manufacture in our country and let the exports take place from our country. India become manufacturing hub. That is the main concept of Make in India, and government is taking several steps so as to make India hub for Make in India. And the recent steps are with a view to increase the ease of doing business in our country. And Make in India is the movement in our country at present. And let us hope in the next few years, manufacturing activity will take place with full steam in our country. Tell me something about One Rank One Pension scheme. This scheme is basically with a view to ensure the persons who have completed equal length of service with equal rank. Let us assume a situation, a Havaldar in army put up 20 years of service and one Havaldar retired in 1980. The other Havaldar retired in 2000. Irrespective of date of retirement, based on the length of service and based on rank, if both the retiree persons have same rank, same service, that means same years of service, they should get same pension. That is the concept of One Rank One Pension scheme. Irrespective of the date of retirement, the persons, whoever put in same length of service with the same rank should get equal pension. If somebody retired in 1980, somebody retired in 1990, somebody retired in 2000, it doesn't matter. All should get the same pension depending on the length of service and rank. That is the concept of One Rank One Pension, and government in principle accepted it. Now Narasimha Reddy Commission is looking into it. Explain the significance of climate summit. Probably you might have got good idea about this after going through my lectures, but I would like to tell a brief climate summit. The main concept is reduce carbon emissions. Carbon dioxide emissions are to be reduced. How to reduce carbon dioxide emissions? Ensure less burning of coal, ensure less burning of oil, depend more on solar energy, depend more on wind energy. What is the need for reducing carbon dioxide emissions? The need for reducing carbon dioxide emissions is because when carbon dioxide emissions increase in the atmosphere, they will trap the heat. Carbon dioxide will trap the heat, because of which temperatures will rise. Because of rise in temperatures, icy glaciers will melt, because of which low-lying countries will be submerged and people may be required to be displaced, and there are other disturbances will also be there because of increase in temperature. So as to reduce the temperature increase, we have to reduce carbon dioxide emissions. Keeping that in mind, this climate summit assumed significance. Right friends, with this let us conclude the 4th module. Please do join for 5th module. Have a nice day. Thank you.